All right. Well, it is somehow another week has gone by here since the last video, and we've got some updating to do. I mentioned last week a few things. Number one, I put a video out saying that the price action to me was very bullish, very constructive in the face of that inverted hammer candle we had on Bitcoin, in the face of the uncertainty kind of going into the election, in the face of all of the historic data that had shown us potentially what a roadmap would be coming into and then following the election for risk assets, regardless of what the outcome was. And so let's hop into it, folks. Let me just say that there's a lot of different viewpoints going on right now, and on Twitter specifically, on X specifically, relating to I'm getting a bunch of questions. The viewpoints in terms of, could this be a fake out, and you know are we going back into the range? I do not believe that's the case. I'm very glad that I'm hearing this. Actually, I'm very glad that I'm hearing the bear divs. We need a little correction here. Last night, that's all I was kind of reading as I was catching up from the week. And I'm glad we're seeing it. I'll get into that more in the video. What trumped everything for me last week and the week before and the week before and the week before and the 6 months before is sometimes it can be hard to listen to me. I get it when I'm just constantly bullish. I'm not exploring too many downside scenarios because, folks, that's a way to lose. Okay, statistically speaking, 95% plus traders are going to lose money. That's a reality. And so those that accumulate in deep value areas, right? This is the S&P. This is going all the way back to 2000. Deep value areas, and just don't do much, right? Like who can project these movements? I do it. That's what my account is built on, right? Primarily speaking, I've gotten the direction on the major things that I cover 100% right since the lows in 2022. I did get direction wrong on half of the things coming out of the COVID lows. The NASDAQ, I called. Bitcoin, I did not. I thought we were going well over 100K in November 2022. So I got that wrong on Bitcoin. Here I got direction right with when I first started investing. I made some mistakes and sold. So Crocs, I bought at $1. I sold it at $3. Trying to, be the man, and I'm going to get in and out of, this isn't Crocs, this is the S&P, mind you. Trying to, project the in and outs of something like Crocs, and next thing you know, it's $100 a share. I never re-entered with my beautiful exit at 3, and I was a Warren Buffett genius investor. Yeah, nice try. Nice try to project volatility in an asset with a total addressable market that is, at the time when you find the idea, percentages, single-digit percentages of what the total addressable market could be. And so that lesson I learned, I'm carrying over to what I'm doing today, and that's why I'm sharing these videos with you. Learn from my mistakes, let the market do the work, and with that, let's jump into it. Just a reminder, I'm not a financial advisor. Don't take any of this as financial advice. The things I talk about could go up, they could go down, they could go sideways. I'm doing these videos for education, to provide what I just think is kind of a beacon of doing less if you're invested, and let the market do the work, and try to numb out all the short-term volatility. That's just a psyops, folks. That's the market trying to get from you liquidity, engineering liquidity to move higher. And so now, this is the environment that we're in, okay? That's the environment we're in when it comes to Bitcoin, that we've been in. And that's all that I care about. That's the world risk asset denominated in USD speaking. This is our Bitcoin weekly chart. Okay, folks, remember last week I talked about what area was I really concerned with? This area, the true, what I thought was an all-time high, that was a deviation. The fact that we came in, bounce off that zone, we're breaking out. That was the key to me. Do I care about a candle, a weekly candle? No, I don't. I was actually glad to see this candle last week, right? I was glad to see uh, I was glad to see this candle, right? This inverted hammer, right? Which is a bearish candlestick, because that gets all the traders and the speculators, most of them that are not convicted, out of the way. Okay, freeze the way for the market to then again fool most of the participants, that most participants that aren't convicted and don't have a long-term outlook. And here we are this week, with just a beautiful start, to what I believe is going to be continued uptrend. And let me also say, I don't think, I don't think we get a test of the 70 region. I really don't. Um, Remember everybody looking for, right? We broke that, right? That's compression. That's 6 months of compression. We broke it. Everyone kind of, okay, I'm waiting for confirmation. What's confirmation? Is a retest. That's traders. This is traders lingo. What did I say about most traders? They're going to lose money. So looking for this retest, it never came, and the market went without them. Again, I could be wrong, but I do not see, again, I don't see what's the level everyone wants to get a nice little retest off of. It's this 70, 71, 72, 3, right? Wouldn't that be beautiful? That helps us all out, makes it easy. I just don't think the market is that easy. We're going to see. We'll find out. If we were to get some type of pullback, I would expect it to maybe come down into here. Again, this is the lowest probability I'm seeing, right? Freak everyone out that had their stops there. Those get triggered. Dip buyers here, they put a stop loss under those. Those get triggered. Like, you know what I'm saying? Like, that's a worst case scenario for me. But I'm talking lowest probability. Lowest probability. Nothing, again, I'm not trading anything based on anything that I'm saying here. These are just me talking out loud for you folks. That's all. So what's my the way I look at this right now is this move, the energy of this move takes us, in my opinion, to a minimum target of 150, 160, 165,000 before we get any meaningful correction. That's a conservative look for me. Before we get any meaningful correction. Now, we could get a correction, obviously, before that. When I say meaningful, I'm talking to the tune of like 20 plus, 20, 30%. We could get one if and when we breach 100K. I've got a little sub. All right, so I'm looking at this 1, 2, 3, 4, back into the 100K. You know, if we slingshot above 100K, I think retail enters, we could get to 125K pretty quickly, and then you got a lot of 100K stops. You know, freak everybody out, and then another push. These are minimum targets, folks. These are minimum targets. And so again, the market right now is looking beautiful. The power behind this move, if we look at RSI, you know, we haven't even gotten into overbought territory, which is what I'd like to see, meaning we are still in the potential infancy, right? If we're looking at similar point in time, right? Similar point in time from a power perspective. Okay. All right. Let me get rid of those squigglies. Next, the pattern, the reaccumulation pattern that I've been basically plotting on lower time frames. Again, last week I just said look bullish. Why did this look bullish to me? Well, because of what price action was doing. Let me put volume up here. Let me put the daily chart up. Okay, so what do we look for towards the end of a reaccumulation? We look for a few things. We look for volume to start coming down. And let me just pull up, right? Volume to come down as price starts to move up, okay? And then we look for a volume spike, which is to say, greater than the average volume for 3/4 of the range. Okay, that white line indicates what I'm talking about there. And right, and so we got the volume spike. Boom, we get from a structural standpoint, all we did was last point of support, jump across the creek. We backed up to the last point of support, sign of strength region, and we broke out on volume. That is bullish. RSI has been over 70 now since Wednesday. It's Wednesday, Thursday, Friday, Saturday. So 1, 2, 3, 4 days. 4 days above. The last poke above lasted a day. The last one before that lasted less than a day. So now we're progressively building power with this move as we move out of this reaccumulation. And so the structure looks bullish. And a reaccumulation that I'm calling this is my opinion, right? A reaccumulation here that has lasted over 7 months. The true power of this trend will express itself in not giving anyone, any type of meaningful pullbacks. That's that like I plotted right there. So I don't believe that's coming. I really don't. I could be wrong. I just don't see it. I don't see it based on everything that I'm sharing with you. Again, this is purely speculative. Don't do anything right with any of this information because I'm probably going to be wrong, but I think, a push into 90K towards 100K in December is on the table before some type of other correction, but I just see us going a lot higher, right? 100, 124, 125, 150K even by the end of the year is would not surprise me in the least. Would not surprise me in the least. So market here is just looking very, very bullish. Oh yeah. Let's get to these bear divs, right? So last week it was the inverted hammer that was bearish, and this week it's the bear divs, which is just fantastic. I love reasons for doubt. We want that. We want reasons for doubt. We want reasons for doubt the entire way up. Once it becomes glaringly obvious, right? So let's say we were to get to 96K like swiftly, then I could see a nice, sharp week, 2 week correction that scares everybody again. That was the top, right? Prior to, then exploding up past 100K and then maybe a really severe one when our friends started buying or retail starts buying back into maybe high 80s or mid 80s, something like that. Again, that's just pure speculation, folks. All right, let's get into these divs. I'm going to go into the 4-hour. Let me clean this up just a little bit for you all and get rid of that. Get this out of the way. All right, so we're working on some, a trader's lingo again, right? Trader's lingo here. We're working on bearish divergence, which means price is going up. RSI, the power behind the move is making, price is making higher highs. RSI is making lower highs. Okay. And so what does that look like? That looks like that and that. Okay, let me zoom in just to make this easier to see. I realize sometimes you guys and girls will be looking at this stuff on the phones. And so that's what we're looking at. And we have just a beautiful bearish looking rising wedge, right? I love bearish looking patterns early on in expansion because again, it's just the market's trying to, in my opinion, just get traders off the scent. And again, this is great to see, right? Well, rising wedge, that means we're breaking down, right? Boom, seeing a lot of that at a minimum. I know there's some large accounts calling for, going back to 50K. Again, I think that's looking through the lens of a very narrow lens and ignoring a lot of the things that have transpired um, in the global risk markets. All right, so there's a bearish divergence. Let's go back to, sorry about that. Let's go back to our last expansive move. And this is, again, for those of you that have been following me, I've been plotting these Wyckoff reaccumulations, and this last one was just beautiful as well, right? You remember this last one for those of you that have been following my videos for a while. This is a 4 hour, what did RSI look like at key inflection points just as we were leaving the reaccumulation? Well, let's take a look. We had, right? What are those? Price making a higher high. What was RSI doing? Literally bearish divergence for, so the 9th of February through the 19th of February. So 10 days eventually led to a correction. How big was this correction? Wasn't that big, right? You had a flat correction. We're talking about a range of 52.58 to 50,000. So it's basically kind of compressed within the 10% range for a couple weeks prior to making the next move up. So again, that divergence lasted a lot longer, didn't result in maybe what people were thinking about. Certainly some volatility along the way. Does that mean that's the same thing is going to happen here? No, none of the past does not guarantee what's going to happen in the future. Let's take a look at some other areas prior to expansion. This was that September 2023. It's all over, right? And here again, just a beautiful illustration of, again, a reaccumulation. What do we see again? And what am I interested in? I'm interested in these areas. The areas at the end of reaccumulation. Notice what I'm doing here, folks. The end of reaccumulation as we're breaking out. Okay? That's what I'm interested in. And so I'm looking at the character of what the market does after reaccumulation has ended. That's what we're doing here. This is the exercise. And so is there alpha in looking at divergences during these time periods? Let's look. So we had a period of price making, higher highs here, no bearish divergence there, right? RSI also making higher highs. We then had this was just a beautiful corrective move, vertical accumulation, where we had a 3, running flat, right? Sub 5 of minor, sub 4 of the minor 3 into 5, and then A, B, C, again, another running flat. And what do we have in terms of divergences? We did have a big one right there, a big, large. How long did that one last? 24th of October 2023 to November 9th. So what is that? Almost 2.5 weeks. How did it resolve? Well, it resolved in an A wave, but again, what was this? What people did we get? Did people get what they were hoping for? No, they didn't. So just shallower corrections, and market resumed a very strong uptrend. So, folks, just a few examples of these aren't things that I believe are very reliable during true expansive market phases. So please do yourself a favor, ignore as much of that as you possibly can. Okay. Let me get rid of that, make my charts beautiful again. And I think that's all I really want to say about that. I think that's all I really want to say regarding what's going on here. So I'm going to go ahead and get rid of that. I'm going to go ahead and get rid of this. And we're going to move on to the Bitcoin miners. The Bitcoin miners against Bitcoin had a very, very big week. Very, very big week. This is WGMI, the Bitcoin mining ETF denominated in Bitcoin. And what do we see to start the week? We saw just a shakeout against Bitcoin, and then, and again, how reliable are, short-term candles and things like that? Well, we had a bearish engulfing candle, WGMI denominated in Bitcoin last week. We had a bullish engulfing this week. Bounced off the bottom of the Ichimoku cloud and rallied all the way up to close the week at the weekly highs. RSI on the weekly also broke out. That's what I want to see. That's very, very, very good sign. I think these miners are coiling up for the move, the 2-3 X in the short term type of move, if not more for some of the other individual names. I don't know what those individual names are, folks. I'm not good enough to be able to figure that part of it out. However, the whole sector looks just fantastic right now. If I'm looking at WGMI, where did we close the week? Let me put this in line form just to give you a indication of what's going on here. Now, what's the most important level in this entire chart? Let me make sure that's accurate. That's a level we closed in right here, going all the way back to March 21st, 2022, where this downtrend, 1, 2, we closed above this 2, okay? Above that 2, which started the initial downtrend, 3, 4, 5. Market has now rallied all the way back to close above that key inflection point, pivot point, and there's just no other way to look at that but bullish on volume as well. Volume came in. RSI on this is just looking great. So we have a downtrend break in terms of RSI as well. So no bearish divergence possibility here. That was broken. So price making a higher high, and we're breaking out in terms of RSI with a lot of room to run. Notice the last moves on the Bitcoin miners against Bitcoin. When the power behind the move was at these levels, we had June, July, another 2-3 weeks of outperformance, another 2-3 weeks of outperformance there potentially. So that lines up with the way I'm kind of looking at this. Couple week outperformance, potentially a correction, and then continuation on. MicroStrategy continues to project similar to how I've been counting it. Strong uptrend. RSI this week broke over 70. These targets might prove to be conservative, but MicroStrategy looks good to continuation. And so next target for MicroStrategy here is 555. Can we stop at 344? Correct? Possibly. I would not be chasing MicroStrategy here, folks. The time for me in terms of allocation into MicroStrategy when no one was talking about it and everyone was frustrated in that circle, okay? I do think, let me pull up MicroStrategy against some Bitcoin miners. Where's that? MicroStrategy denominated against WGMI. Again, it really just favors the miners in terms of outperformance here. I don't know how else to look at it objectively. And so you've seen this level I put up a few weeks ago when I was charting the two. It's respected it, right? This is a supply level. rejected, rejected, rejection. Those are rejections. Now, could this also be consolidation at all-time highs? Sure. It could be. But for now, it's proving to be resistance. We do have the power behind this move stopping at short of 70 on the RSI. And so, you know, just, you know, be wary of that here. Be wary of that here as well. All right, folks. That's it for the video. Hope you guys have a great rest of your weekend. Look forward to catching up on this next week. Take care.